The most recent, that is December, Stanbic IBTC S&P Purchasing Managers Report revealed that Nigerian private sector firms demonstrated significantly increased confidence in the outlook for business activity by the end of 2025. Firms were much more confident as sentiment jumped to a 6-month high as close to 59% of respondents predicted decent growth. Many have said Nigeria is at the cusp of a transformation, while others remark that this is still optimism not yet backed by metrics convincing of the take-off that has long eluded the economy. But to be clear, strong optimism and confidence are positive signs, as they are tailwinds encouraging investment activity that promotes growth. Mr. Tony Osibodu, my first guest in 2026, is a veteran in the logistics business based in the United Kingdom and in Nigeria, and also on the ground to see what is changing in the numbers and velocity of trade, not just between Nigeria and Europe, but also to China, which has the advantage of an easier business experience in terms of doing business between Nigeria and the Far East. According to him, small and medium enterprise participation in the export business is also rapidly accelerating.
One of the most significant shifts we are seeing is a serious increase in non-oil exports out of Nigeria, and this trend is bound to continue. The foreign exchange squeeze of 2023 forced Nigerian businesses to look outwards. Exporting moved from being optional to being necessary. Although currency stabilized in 2025, the mind shift had already occurred, and the export trajectory remained firmly upwards. What is particularly notable is the level of SME participation. Small and medium-sized businesses are now actively exploring exports because it allows them to earn foreign exchange, hedge FX risks, and scale beyond a constrained domestic market. If banks move beyond excessive risk aversion and partner intelligently with credible exporters, the impact on the economy will be significant. Also, Nigeria's solid mineral sector is expected to gain further traction in 2026 as ongoing reform mature and recent investments begin to translate into higher production and exports. With improved regulation, stronger site security, and increasing emphasis on value addition, the sector's revenue contribution is projected to grow steadily, potentially doubling current levels if illegal mining is further curtailed. Critical minerals such as lithium, gold, limestone, and industrial minerals are likely to drive growth, positioning the sector as a meaningful contributor to foreign exchange earnings and non-oil GDP. By 2026, the sector is also expected to attract deeper foreign and domestic investments, particularly into processing and refining facilities rather than raw mineral exports. However, progress will remain uneven unless gaps in infrastructure, geological data, and financing are addressed. One other sector that excites me greatly is fashion and couture. So this is a potential billion-dollar industry. Banks can play a catalytic role by identifying strong brands early, helping them professionalize operations, finance production, manage exports, and build international distribution channels. Over 1 million Nigerians have left the country in the past 3 years, and they haven't left their palate behind. Demand for Nigerian food products abroad is rising steadily. The customer base now spans a broader 20 to 50-year-old demographic, and people whose tastes are already set and who actively seek authentic Nigerian food. From a logistics point of view, this creates real opportunity across packaged foods, spices, sauces, and processed agricultural products, provided quality standards, compliance, and cold chain logistics are taken seriously. What drove people away from investing in Nigeria a few years ago was the exchange rate instability. That uncertainty made long-term planning difficult. However, as stability was achieved in 2025, we've seen a notable shift in investment. From mid 2025, diaspora capital inflows into Nigeria increased exponentially. Nigerians abroad and international investors as well began pouring money into treasury instruments, mutual funds, equities, and other asset classes, including real estate. As interest rates in the West continue to trend lower, Nigeria is now offering yields that, in most cases, double that of the Western world. With improved currency stability, the risk-reward equation has become quite attractive. In many regards, it's now become a no-brainer. The UK welcomes Nigerian talent, welcomes Nigerian skills and consumption, but Nigerian-led businesses often face regulatory friction, bank de-risking, compliance hurdles, and immigration uncertainty, which makes scaling harder than many would expect. As a result, Nigerian entrepreneurs increasingly operate with one foot in the UK and one foot elsewhere. China offers speed, scale, competitive pricing, and a willingness to operate within infrastructure constraints. For many Nigerian businesses, these practical considerations matter more than ideology. That said, the UK and Europe still dominate services, finance, governance frameworks, and trust-based systems. Nigeria will trade with whoever reduces friction. By 2026, Nigeria's business winners will not be those waiting for policy miracles alone. There will be businesses that understand logistics, manage risk intelligence, leverage diaspora networks, and build systems that work despite the uncertainty.
Hello and Happy New Year. It's great to be back. This is Global Business Insights, where we bring business perspectives and thoughts to help you interpret trends and navigate what many expect to be an unusual year. US President Trump tweeted yesterday that Venezuela will be turning over 30 to 50 million barrels of sanctioned oil to the United States, adding that this oil will be sold at its market price, controlled by Trump, to ensure it is used to benefit the people of Venezuela and the United States. It's only a week into 2026 and the year is already hinting at intensified geopolitical activity. Although global markets reacted with calm at the capture of Venezuelan President Maduro, most exchanges initially rallied, with still many questions surrounding governance, sanctions, and political legitimacy that remain to be answered. Asian stocks were also seen extending their New Year's rally as investors were drawn by attractive valuations and stronger growth prospects. The lingering bullishness on Wall Street seems to be driven by fiscal and monetary stimulus expected to lift the consumer mood ahead of the US midterm elections, a positive earnings outlook driven by improving consumer demand, lower energy prices, and the artificial intelligence boom. But all this is still amid heightened inflation risk. US oil companies' shares, however, closed higher on Monday after Trump said the United States would take control of Venezuela after the arrest of its president, signaling easier access to its vast oil reserves. Trump also says the US may subsidize efforts by energy companies to rebuild Venezuela's oil industry as he pushes for businesses to invest, only days after ousting strongman Maduro. Still in the US, just out, the United States S&P Global Composite PMI inched down to 52.7 in December, still expansion from previous 53 reading. Germany's service sector PMI fell to a 3-month low of 52.7 in December from 53.1 the previous month, though the rate of expansion eased for the second consecutive month due mainly to a slower increase in new business growth, however, remains at a solid pace. pace. The Eurozone economy also expanded at a slower pace last month. It, however, ended 2025 with its strongest quarterly growth in more than 2 years, as solid momentum in services offset the contraction seen in manufacturing. Eurozone inflation slowed more than expected as economic growth held up, confirming views that price pressures have largely dissipated. Growth was surprisingly resilient all through 2025 as domestic consumption filled the gap left by falling exports. December inflation in Germany slowed to 2% from 2.6%, falling below expectations for 2.2%, while in Spain inflation came down to 3% from 3.2%. We also saw inflation slowing slightly in France. European Central Bank projects that the dip that we are seeing in inflation heralds a long string of below target readings that we should see in coming months before a return to the 2% target in early 2028. On oil, the 8 OPEC Plus producers with voluntary production curbs confirmed their intention to keep production steady until the end of March. This is likely to be confirmed again at the next meeting in early February. Gold prices inched up yesterday, close to record levels, with safe haven demand being fed by geopolitical tensions over the U.S. capture of Venezuela's president, with expectations also of U.S. rate cuts early in the year. Still on geopolitics, China yesterday banned exports of dual-use goods that can serve military purposes to enhance Japanese military power, as tensions continue to heighten over Taiwan, a self-ruled island Beijing claims as its sovereign territory. The new controls on exports to Japan intensify a dispute between Asia's top economies over remarks Japanese Prime Minister Sanae Takaichi made last year on Taiwan. Also yesterday, copper soared to a record high of more than $13,370 per ton, having only passed $12,000 for the first time in late December. Copper extended a rally, bursting through $13,000 a ton for the first time over worries that the Trump administration may introduce a tariff on the refined metal. This move has already attracted holdings to the US, potentially leaving the rest of the world short. Also, there are concerns over supply disruptions at major mines, including Freeport McMoran's huge Grasberg complex in Indonesia. Anheuser-Busch InBev says it is buying back a 49.9% stake in its metal container plants in the United States for about $3 billion. In a statement, it confirmed that the repurchase option will be funded with cash and is expected to close the transaction in the first quarter of this year. NVIDIA stock saw some positive traction as CEO Jensen Huang said its highly anticipated Rubin data center processors are in production and customers will soon be able to try out the technology. NVIDIA has also just announced Alpamayo, touted as the world's first thinking, reasoning, autonomous vehicle AI application to be launched on US roads later this year, starting with the Mercedes CLA. Alpamayo, according to Jensen, is trained end-to-end and introduces vision language action VLA models which enable self-driving systems to interpret what they see, reason about complex driving scenarios, and generate driving actions. According to NVIDIA, the approach improves transparency, safety, and robustness in autonomous systems, particularly in complex real-world environments, and supports progress toward high levels of vehicle autonomy. Asian stocks saw mixed trading in the region amid the geopolitical turmoil. Brent crude slips under $60 per barrel. Well, that's it on this special edition of Global Business Insights. This is Bode Oshosami. Again, Happy New Year and thanks for watching. Bye-bye.